Hanks and Jenny Horn here with me in studio. I mean, companies like Supermicro that have just gone ballistic the last few days, even after pulling back the last few hours, still up 2.5% on the day. ARM's going nuts, up 25%. I mean, this type of stuff is generally reserved for like the frothiest moments of markets. Kevin, how do we kind of put this into our playbook going into a very macro week? The market seems to like already know what's going to happen this week.
You know, I'm looking at the S&P, and the S&P right now, if I have this right,
it's a little down.
Is it
a little down.
About 30, almost 30 points off its highs today.
Yeah.
That's what I'm looking at.
Okay.
Because a failure up at these levels, making new highs, and then failing on the day, depending how we close today, could cause some real concerns going into tomorrow.
Well, the money's going into the Russell. All that big cap money's taking a break today, and they just pile it into something else. It's like bullish musical chairs.
Boy, if they're rotating into the Russell from here, that's a dicey pairs trade. Let's put it this way.
Okay.
Selling the S&P that's overbought, right? The S&P started the morning at a 74 RSI. A NASDAQ that was higher today, now lower. This is, all I'm saying, Oliver, is this market is fragile. And it could be tipped by the least bit of bad news. And I don't know if CPI tomorrow will do, but the expectations are for 3% on the headline, 3.7 on the core. That's down 0.4 and 0.2. It just seems like with the rest of the market being strong, if they can, the Goldilocks scenario is strong data, lower inflation.
Right. And tomorrow we're expecting 3% year over year. The connection between bonds and the Russell, yields in the Russell, where the Russell's the only one that's still been down when yields are up, basically, makes me feel like today's trading like we got to print tomorrow in the two handle, basically, for CPI. That's what today looks like to me. Maybe not a big bond rally, but the bond rally's still there. The dollar's okay, but it faded from early this morning. It's like we got the print ahead of time. Boy,
the wages number in a week ago's non-farm payrolls just has inflation on my radar.
All right, fair enough.
The fact that it went from 3.9 2 months ago to 4.5 is alarming.
Yeah. I'm with you. ISM prices paid way too hot. Yeah. So a lot of confidence, though. What's interesting that you guys are talking about on Next Gen 2, Jenny, is that there are some companies here that are like blowing up in the opposite direction too. Mm-hmm. Big Lots, which got wrecked today.
Right.
You put that next to ARM up 25%. Again, and you've got a really interesting market here.
Yeah, it feels like right now stocks are getting punished. I mean, like some of these small, like Children's Place on Friday. And I guess like a lot of these companies have like right now like major debt issues as like a going concern. So that at least to me makes sense. But it's just hard to compare. Although you mentioned Supermicro, which also got me thinking about ARM, which I do think these names are really interesting, especially because ARM it's added 80% to its value in the last 3 trading sessions, which is just like crazy.
Wow.
I mean, trading at a peak today at 164, that's more than triple its IPO price just a few months ago. I mean, it's astronomical. But the short interest in the stock in ARM is almost 10%. Short interest in Supermicro's 10.5% of their overall float. Wow. So I feel like it needs to be discussed. Like, are we right now in a massive short squeeze in some of these names? Nvidia's short interest it's only like 1%, which I think speaks to more of like the validity of Nvidia's recent run-up. But some of these small names, I mean, do have some potential right now. I mean, the short sellers are getting crushed over the last several sessions, but their short interest is relatively high.
No, I like that point. I mean, it's probably adding some fuel to the fire. Because every day, when the shorts have been picking up with the rally, so I don't think it's like why it started, but in the last week, it absolutely is playing a role.
How sustainable is that chart?
Well, I mean
come on.
Generally not very sustainable, but it also probably wasn't sustainable. Somebody tweeted at me today, Tay Kim, Barron's writer, or Bloom, and was pointing out that just a couple weeks ago, the thing was trading at like 15 times valuations, which seems like paltry compared to its group. So the market's basically looking for things that were left behind. It's like, oh, wait, no, you're a great AI stock. Okay, you might be a good AI stock. Oh, you're a retailer that's having trouble with debt right now. Yeah, goodbye. We want nothing to do with you.
$1 price target.
Yeah.
One.
Yeah, for the Big Lots stuff.
Yeah, for Big Lots.
Right. All right, so the market's definitely divided. Nvidia's over 600 billion now, though.
Nvidia is over 600 billion today, surpassing Amazon as far as the 5th largest company in the world by market cap. That hasn't happened since 2002. But to your point about the way that the market is favoring these names, 4 years ago, this was not even one of the 20 largest companies by market cap. Just 4 years ago, now it's number 5. I mean, it is amazing. So I think that we're seeing only more exuberance come into these names. It makes me a little bit worried about Nvidia, though, into earnings.
Okay. Yeah, it's about
Wednesday,
0.5%.
the 21st.
That's enough.
Big day.
Big day.
Nvidia's earnings.
For sure. Honestly, I would think that those earnings are so crucial at this point that it might limit how far it's the sort of connective tissue of AI could go before seeing that number. But there is such absolute confidence in this right now that the market doesn't even need to wait around for Nvidia. It's confidence in chips without hearing from Nvidia, and then it's confidence in inflation without actually seeing the number tomorrow. So, I don't know, maybe we fade before the close. It's just, I'm with you, Kev. Something here is a little bit over-enthusiastic,
Yes.
possibly.
Yes. Oliver, listen. Timing the market is virtually impossible or tricky at best.
Yep.
But there's just, can it go further? Yes. Should you be lighting up probably in some of your overall exposure to these stocks? Yes. Is there a rotation coming? Possibly. If the earnings, if the market team starts to broaden out on the breadth, yeah, there probably become a massive rotation out of 7 into 493. I think that's possible.
Well, that's what's amazing, how big these companies are. A single day of flows going out. If there's any truth to the notion those flows are just going into other equities, it's enough to power 6 out of 11 sectors. No, 7 out of 11 sectors. So even though you see the S&P 500 down today, technically, 7 of 11 sectors are higher. You got a 2% rally in the Russell almost. Super bizarre. Okay, thanks, guys. Jenny Horn, Kevin Hanks. A fascinating market today.